The term unicorn, you know it. It refers to startups worth at least $1 billion. Aileen Lee, the founder of Cowboy Ventures, came up with it 10 years ago. Back then, it was pretty rare. Only 39 companies on the original list. Now there have been 532. That's according to Lee's new report on the biggest startups and where venture capital is going from here. Aileen joins us now. Aileen, welcome. So
Thank you.
I got to start by asking, the unicorn concept arguably went too far. Not your fault. Became a marketing thing. Startups schemed to get unicorn valuations. So what's the new bar for prestige if it's not $1 billion?
Well, I mean, given that multiples have shrunk so much from 2021, I think $1 billion is pretty great for to achieve in 10 years. So I think maybe a couple of years ago, people thought it was too easy and it was common. But the reality is it's hard to build $1 billion company. And in today's environment, you probably need to get to at least $100 million in revenue for that. So and getting there in less than 10 years, I think is pretty special.
So is it more about the revenue now? Is it some version of sustainability within the business model as well?
I mean, I think for building long-term success, it always has been multiple measures, right? And so, what valuation is a convenient way to take a snapshot of where companies are. And yes, I think in a period of lots of interest rates were low, right? Venture returns historically had been amazing. And so lots of capital poured into the private markets, especially when interest rates were low and tech companies were trading at all-time highs. And so I think the venture industry and founders and companies raised a lot of money and broke records in terms of how much they raised in valuations. And we're getting, so I think we're working through a bit of a hangover right now in the tech industry, but we're working through it. And, for people who are kind of sick of these fast growing tech companies that build so much value, I think we're just getting started. So, and that's part of what's in our report is that they grew 14x in the past 10 years, which I don't think we could have imagined. And it's about a 30% year-over-year growth rate, which is, I think, pretty amazing. And so maybe it'll be a little bit slower with rates higher, but we anticipate over 1,000, maybe 1,400 in the next 10 years.
Something else in your report is the geographic shift in some of these unicorns. 10 years ago, it was rare to see a significantly sized tech company in LA or even in New York. How has that changed?
Yeah, so I think COVID effects in particular and distributed work really changed the nature of who can start a company, where they start a company. So again, in the original set, we had 39 companies and San Francisco really was unicorn headquarters. The next largest hub was New York and they only had 3 companies. First of all, kudos to New York. They have grown pretty significant in terms of being a tech hub. Now, unicorns are based in New York, but there are an increasing number in Denver and Boston and Austin and Chicago and San Diego. We're at Cowboy Ventures. We're investors in a number of companies that are actually not based in either California or New York. Some of our healthiest, fastest growing companies, one called Drata and Security is based in San Diego. Guild, which is an upskilling company for hourly workers of enterprise companies, is based in Denver, and they're finding great talent. It's a great quality of life. So I think that's one of the positive things among while we're getting over this hangover, I think tech is becoming a little bit democratized in terms of who co-founds a company and where the company is.
Or at least it was, because and I say that because now with AI, it seems like more of the center of gravity is moving back west towards Silicon Valley, San Francisco, and also towards Seattle. And tell me if I'm right in that. It also seems like fintech is part of what pulled up New York and sort of the presence of this core big company that's investing in R&D.
Yeah, I mean, so 40% of the companies in New York on our unicorn set, and again, our unicorn set is U.S. based only. So usually the whole set is about 50% U.S. and 50% international. So we're just looking at U.S. based companies. We also just look at companies that are 10 years old or less. So these are the companies that were started and funded for the first time starting in 2013 through 2023. And yes, about 40% of the ones in New York are fintech companies. And I think, San Francisco, there's a lot of people, especially in tech, have been pretty vocal about how quality of life, cost of living has changed in San Francisco, and a lot of companies became distributed. So I think it's going to be a combination of whether 4 of the most valuable unicorns in our data set, and also a lot of the AI companies are based in the Bay Area. So as AI gains steam and momentum and companies go back to work and do wind up headquartering in the Bay Area, I think that the Bay Area has a shot at maintaining its unicorn headquarters status.